And that is one of the benefits of industrial, I think, is that for the most part, you are getting corporations that have healthy balance sheets as opposed to residential tenant, which you can check all their stuff, but for the most part the tenants aren't going to be nearly as wealthy as, call it, leasing out a warehouse to Amazon, right? So you're going to get a pretty good sense that there's retained earnings, the company's got healthy cash flow. But due diligence, like you said, that it's imperative. Like, people need to be doing their homework to know exactly what they're getting into.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Chad Griffiths is an industrial real estate broker as well as investor. Chad, welcome to the show.
Hey, thanks so much for having me on, Sam. Really appreciate it.
Pleasure's mine. 3 questions I ask every guest who comes on the show, 90 seconds or less. Where did you start? Where are you now? How did you get there?
Started in 2005 as a broker, had no idea what industrial real estate was, almost slipped into it. A bunch of brokers at the office were heavily involved in industrial. So just by sheer serendipity, I found myself in that role. I've been doing it for 17 years. Since 2014, I started investing in industrial properties myself with a handful of partners. We built up a decent sized portfolio, and then I just love talking about industrial real estate. So I've got a YouTube channel and a podcast as well, where I just talk everything about industrial real estate.
So you went from 2005, you got initiated as a broker, and then it took you 9 years to 2014 to start investing yourself, to become an investor yourself in it. What was the pivotal moment, or kind of the aha moment, when you're like, hey, wait, why am I not putting my own capital in this opportunity?
It's funny you asked that, because I wanted to pretty much from day one. I'd had some residential properties before I got into commercial and into industrial. So I knew right away that that's something I wanted to explore, but it just took time. It took time I was raising a family. So you've got all the things you have to do with a family, buying a house, buying cars, raising kids. So it just took time to get through that stage of my life and then get to the point where I had enough money to invest. So I haven't done the syndicate model where you sponsor a deal and you have investors come along. It was all my own capital that I deployed. So it just took time. It's 9 years. Yeah, when you do the math like that, it does make it seem like it was a long time, but it did go quick too.
Right. So you went in, when you say as an investor, you weren't coming in as a partner, you were coming in buying your own deals.
Yes. And still to this day, everything that we've bought has been, we've basically set up an LLC for every single property that we bought.
Okay. And you said you aren't doing a syndication model, so you're not bringing in outside capital at all?
We've got a few partners that are really close friends that have come in on a couple of them. But I've got one main partner. Him and I have bought everything together. We've been on every deal together. And some of them, it's just him and I. And then others, we've got a few small partners as well.
Now, you're still brokering as well, though?
Still brokering. That's the majority of my day-to-day business, but it does feed into itself because I'm looking at properties all the time. I'm studying the market all the time. So I'd like to think I just have my finger on that proverbial pulse.
What is the deciding factor for you between what you wish to broker and what you want to buy yourself?
I kind of make sure that I don't skirt that line where could be a little bit unethical. So I put everything in front of clients first. I'll usually look at something if no client wants to buy it, or if it's outside of the main market that I work in. So I don't want to blur that line by putting my own self-interest ahead of clients. So the flow is usually run it through clients first. If nobody's interested, then I'll take a look to see if I can make sense of it.
What are some things that you feel like others miss when you put a deal in front of them and all of them pass, and then you come around and say, no, I think this is a good deal? What are they missing?
Probably, I wouldn't say it's necessarily something that they're missing. They've got a different risk profile. And a lot of the time, the investors that do it full time, they want to make money when they buy. So they might want to buy 80 cents on the dollar for what the market value is, because that's their business. They actually make their money solely off real estate. I don't have that same profile because I have income coming in from brokerage. So I don't need to get that immediate lift right off the bat. So I can pay retail prices. Essentially, I can pay what the market is, whereas a lot of my clients are trying to get things at a discount, and rightfully so. That's how they're building immediate equity into the property. So I've just taken a long-term horizon. I've got 20-year money, at least in my mind, on how long I can have that deployed for, whereas some investors might have a sunset clause if they've got a partnership agreement and they have to sell after a certain period of time, so then they need to make that really lucrative purchase at the beginning. I just have a different risk profile and a longer term objective.
That makes a lot of sense. On the risk profile side, it's also interesting that you are able to pay more or closer to market rate just because you don't need to get that squeeze right out of the gate.
I like the term squeeze because you're right. That's probably what a lot of these guys are thinking.
Right.
Squeeze. That's a good analogy for it.
Right. Yeah, absolutely. Talk to us about, give us some tactical things that people can do when they're reaching out to a broker for the first time. I'm sure you get a lot of people calling you, hey, Chad, I'm interested in industrial. And I bet there's things right out of the gate that you can tell when it's a tire kicker that's wasting your time. Tell us, how do we maximize our relationships, especially on the front end with brokers?
That is a great question, because you're right. There are significantly more buyers on the sidelines with capital to deploy right now than there are actual sellers. And that's in every asset class. That's not just industrial. It's multifamily, retail, you name it. There's a lot of capital on the sidelines, and there's a lot of people looking. There's seldom a day that goes by where I don't actually have an investor reach out to me and ask if I can send them properties. And it's difficult because I've got a dozen really good clients ahead of them that I know well. So I would say it's a patience game, and it's also a game where you've got to reach out to a few brokers. And what I would suggest is see if you could actually start building a bit of a relationship with a broker, instead of just saying, hey, can you start sending me properties? This is what I'm looking to invest in. You'll be triaged really low on their priority list. So instead I would reach out. Like if you know a lawyer in the area, ask a lawyer if they've got a broker that they could make an introduction to. Any warm introduction you can get is going to increase the likelihood that broker will take the time to get to know you a little bit better. And I would just see if you could take the broker out for lunch, or take them out for the occasional coffee, or just anything to start building a little bit of FaceTime, because you can appreciate if all you're doing is calling a broker, asking them to send you listings, and they don't have a face to the name. They can't even picture who you are, other than they just know your name and what you're looking for. You're just going to be so far down on that list. When a property comes up, you probably won't even see it. So I would start building a relationship, try and find a few guys. There's any warm introduction you can do to start initiating that conversation, have coffee, have lunch with these guys, and get to know them. And I can guarantee you, because I do this with my clients, the clients that I know well are the ones that are top of mind, because I have lunches with them, I have coffee with them. So I think take a long-term approach on getting to know these brokers, instead of just assuming that they're going to send you deals, because it's just very unlikely that you'll get deals if you just calling guys out of the blue.
What about doing that remotely? Let's say you're buying halfway across the country. What's an effective strategy for building relationships long distance?
Yeah, and you're right. You and I are talking on Zoom right now, and this has become very common. Have a Zoom call. There's nothing to stop someone from just reaching out. And what I found, I'm sure it's the same with you, Sam, is people are very receptive to jump on a quick 15-20 minute Zoom call right now, because it's super efficient. They can do it from their office. It's very easy to do. The technology makes it super simple. Just ask the guy if you could reach out to him for 20 minutes to ask him some questions about the market and get to know him a little bit better. Because anything you can do to increase that face time will just increase the chances that you'll get sent deals. And I'd also say don't be afraid to even fly into that city. If you're seriously considering investing in a city, you're going to be there anyways, right? Like you're going to spend some amount of time there, I would think. So when you're in there, just say, hey, I'm coming in from Chicago or Dallas, or wherever you're flying into, and just say, I'd love to meet you, buy you lunch. I've got introduced to you by a lawyer or somebody that you know out there. They'll likely take that meeting with you and just make it about building a relationship, instead of all about you just want to get deals. That's all obviously the ultimate goal that you have with it, but it's got to be more of a win-win relationship, as opposed to just a give and take relationship. And I think you'll just increase your chances. Won't guarantee you get deals, but it'll just increase the chances that you get deals.
What are questions you ask potentially new clients, when you meet them for the first time?
I always want to know what their experience is. Industrial is a bit of a unique industry where it's not as easy to grasp as some of the other asset classes. Like anyone that's bought and sold a couple of houses has a little bit of familiarity with multifamily. It's not going to be natural, but at least they understand the mechanics of it. Industrial real estate can be quite different. So I always just want to know what their background is in industrial. Have they bought and sold properties? Did they have a business that perhaps occupied in one, so they understand a little bit more? It's just a steep learning curve. So if people don't have any familiarity with it, that makes it tough right off the beginning. And then I just want to see how they're structuring a deal. Is it them that's deploying the capital? Are they doing a syndicate? How many people are involved in this? Do they have their money raised yet and committed? Where are they at in their debt structure to actually buy a property if one comes available? So it's getting a comfort level that they're qualified. They understand what the asset class is and what it isn't, and the limitations that go with it, and they're in a position where they can move on something. It's, at a very high level, that'd be like the basic questions I'd have.
Right. And those are things that people should be prepared to talk with their brokers about, which is why I'm asking you, what you like to know out of the gate when you first meet somebody. If you're not prepared to answer those questions, then yet once again, you'll get put to the bottom and or off the list, I would imagine, entirely. So
very quickly.
Absolutely. Tell us, industrial is obviously very, very hot. It's in demand. One of the arguments I've heard and maybe even offered up myself against investing in the asset class is that you're signing a lot of times 10-year triple net leases on properties, and they're not necessarily inflation resistant. Can you argue that point, or tell me why I'm wrong?
I would agree with you, actually. In fact, going back to my earlier point, I actually think industrial real estate should be a scary proposition for most investors. There's a lot of reasons to not invest in industrial real estate. I also think on the flip side, there are great reasons to invest, and that's why I've put the majority of my net worth into it. But I also understand it at a pretty deep level, whereas I see a lot of new investors that perhaps are getting tired of investing in multifamily, or they're tired of investing in another asset class, and they see industrial, because you're right, it is the buzzword of the generation that we're living in right now. But I think that there's for that reason, that's an interesting reason on how you can quite often lock in your rental rate for 10 years. So it's hard to really envision having a great exit strategy if your lease is fixed for the whole 10 years. Really, all you're hoping on is cash flow. Maybe you have some appreciation in rent for the next buyer, but you're not going to hit these big home runs. And for me, I like that, actually. I'm not the guy that swings for the fence every time I'm at bat. I just want to hit singles and doubles. And if I can have a 10-year hold where I've got very minimal time put into it from a management perspective, and it's steady cash flow, and I can hit these singles, pay down some debt, hopefully get a little bit of appreciation, get some cash flow along the way. But those are a win for me. But you're 100% right with that assessment. Is quite often those rental rates are fixed for a long period of time. We are seeing, interestingly enough, a lot more landlords move to pegging those rental rates to CPI increases. So it might be like a fixed, call it $10 a square foot for their rent rate, but then there'll also be an escalation clause in there that's pegged to CPI. And to the landlords that did that a year ago are laughing right now because inflation was 7.9% in February. Right. So those tenants are going to see a 7.9% jump in their rent, which is great for the landlords, but awful for the tenants. So it depends. Like, maybe that's the best way to speak to industrial real estate. Is it is a lot more complex. There's a lot more moving parts on how you structure a deal, whether you're structuring it so that you have 10 years of consistent cash flow, or whether you can get a CPI escalation clause in there, or whether you are doing shorter term leases and trying to increase rents as you go. There's a lot of moving parts to it. And I think that complexity is one of the reasons that I think it should scare the average investor. I'm not the type of broker that will say everybody should be investing in industrial real estate. I'm the opposite. Usually I say, if you don't know what industrial real estate is, stick to either what you know or commit to having to spend a lot of time learning and really understanding what it is, because you're competing against guys that know this market so well, and they'll crush you if you don't know what you're doing. They're smart money. You don't want to be the dumb money.
I love it. And that was, I guess, the next question there is, how receptive are tenants to those leases pegged to CPI?
Well, I mean, the Feds have been trying to keep inflation at 2% as their target for decades, right? So I don't think many tenants would have argued it up until these inflation numbers that came out in February. Now I think every tenant's going to say, well, hold on, like if this is going to be 8%, what does next year look like? Do we see a double-digit increase next year? And then at that point, they're going to start rethinking this. But historically, at 2% CPI, that's a pretty easy narrative for tenants to buy into, right? Yeah, you need to have the rent increase with inflation. We can understand that. But when you start having these 8% increases, all of a sudden it's going to make tenants rethink that.
Yeah, it's going to make tenants rethink it. And then, all the way to the point of at what point can they no longer, it goes, at what point can they no longer afford it? I mean, that goes right in line with, these astronomical rental increases we've seen in multifamily. It's like, oh my gosh. I mean, at some point, the tenant can no longer afford to pay the increases in rental prices. So, what that does to the asset over the long term is, I guess yet to be determined.
It's an interesting time. My crystal ball is as murky as anyone's, but I think you're spot on. It's not even just rent increases, but property taxes. Because like you said, with most leases being triple net, all those increases, property taxes, insurance, common area maintenance, those all flow through to the tenant. And there's increases in all of those. Property taxes is a massive problem all over North America, all over the world, really. Municipalities just spend with reckless abandon. There's very few municipalities that actually have fiscal restraint. So they're seeing huge increases in property taxes. That all flows through to the tenant. Insurance is a massive problem right now. I'm sure you're seeing this across the board. It's difficult even finding competitive insurance. That gets passed through to the tenant. Common area maintenance, because all these contractors doing landscaping and snow removal, they all have their costs. That all gets flowed through the tenant. Like tenants are really getting hit on every side right now. So fortunately, they have that top line revenue growth to sustain it. But I think you're spot on. At what point does the revenue not increase at the same rate as all their expenses are? Like that's a scary thought, really.
It really is. And I guess then it becomes even more incumbent upon you as the landlord to double down on your due diligence on your tenant.
Yep. And that is one of the benefits of industrial, I think, is that for the most part, you are getting corporations that have healthy balance sheets, as opposed to a residential tenant, which you can check all their stuff, but for the most part, the tenants aren't going to be nearly as wealthy as leasing out a warehouse to Amazon, right? So you're going to get a pretty good sense that there's retained earnings, the company's got healthy cash flow. But due diligence, like you said, that it's imperative. Like people need to be doing their homework to know exactly what they're getting into.
Yeah, absolutely. Chad, what's something you are curious about right now?
I'm curious to know how the Feds keep recession from coming, yet still putting upward pressure on interest rates to combat inflation. And I know that sounds like that is literally something that I think about when I'm going to bed, is like, how does this end? Is this going to be a recession? The bond curve is about to invert. That might even invert this week. That's been historically a pretty accurate tell of a recession coming. Is it a mild recession? Do interest rates bump up another 50, 100 basis points this year? What does inflation do? I literally have no idea. Like I've tried studying this a little bit. Like I've even gone back to the 70s when there's a situation like this, and there's just so many other things at play. You can't really look at this as in a vacuum. We got a war in Europe, escalating tension there. Like it's so crazy to me that we come off this once in a century pandemic for 2 years that we run through this. And right after we get through it, and we're now running into this war, huge inflation, interest rates, a recession looming. It's crazy. It's just such a crazy time to be involved in business. And I think what it's really doing is it's just giving everybody a bit of resilience, because if you can make it through all of this, like you make it through anything. Like this is crazy. So I'm excited by it. I find it really fascinating just to see how everything moves and how people make their decisions. But to short answer to the question, yeah, how does this recession, inflation, and interest rate all commingle?
Yeah, I don't know. I mean, my crystal ball is, like you said, as murky as yours is. I've often wondered, repeating the 70s and having massive stagflation.
Mm-hmm.
Which is, because they're trying to balance both of those. And it's like, well, inflation's going through the roof and also the economy sucks. So good luck. Just like, okay, well, this is going to be a very interesting time. So that's fantastic. What's a book you're reading right now?
I'm actually reading one on the Industrial Revolution, which is just because I'm such an industrial real estate nerd. I try to gobble up everything I can, and it's a very fascinating story about even going back to like the 1760s when the UK was going through the Industrial Revolution, and just how everything evolved around the factory and the factory system. I was just fascinated by it. So yeah, I can't remember the title of it, but just a history book essentially.
Man, that's awesome. Absolutely love it. Chad, if our listeners want to get in touch with you, what is the best way to do that?
Email's great. It's Griffiths, CRE@gmail.com. Also have a YouTube channel if they want to go and check that out. Just search my name or search industrial real estate, and I'm sure you'll come across my channel.
Yep, absolutely. We'll be sure to put all those links there in the show notes. Chad, thanks so much for your time today. I do appreciate it.
Likewise, Sam. Thanks so much for having me on.